The stock market is falling. We have been hearing this statement for quite some time now. What is the truth in this? And also, what is the current market scenario? Industry expert Mr. Amrita will explain this to us now.
Obviously, with the Middle Eastern crisis, oil prices though have tapered down a bit, but it has gone up by anything. And India is an oil importer rather than being an oil exporter. And if you're importing oil at a very high price, it gets passed down to the consumer, and that is why we are seeing our petrol and diesel prices moving up. And that also affects other sectors like ancillary sectors like agriculture and various other sectors. So definitely it leads to price rise. And once that leads to price rise, it affects companies' profitability. And that's why you see that. And market is a forward indicator. So what it does is that it factors in all these news and traders will start selling beforehand. So that is the reason why one major reason is Middle Eastern crisis leading to oil price hikes. Though oil prices, as I've said, has come down a bit. And the other important reason is that the US government bond yield has gone up to 5%. So for a foreign investor, when he's getting 5% risk-free in US, why should he invest in India? Because there is a currency risk here also. That is why a lot of foreign institutional investors are redeeming out of equity, Indian equity. But having said that, these are not new reasons. There will be like, we had Russia, Ukraine, we had US-China trade war, we had COVID. India is something that is very intrinsically driven, because there are a lot of economic policies that have happened. Like my generation who started our careers in 2002, 2003, gained a lot because of 1990 reforms. But even this generation gains a lot because of reforms like Make in India, production links incentive. There was a time when electric batteries and all were not made in India, but today they're all made in India. And you are seeing that Apple saying 25% of their iPhones will be manufactured out of India. So a lot of manufacturing initiatives are happening. So if you ask me, because of reforms, because of the way our country demography is, and we are quite self-sufficient, we drive consumption within ourselves. We are not dependent on our products being sold in Europe and Europeans driving our consumption. Because of our unique structure, we might face volatility, but there's nothing to think, oh, Indian markets will tank and it will tank forever. Even if something like 2008 happens, nothing like looking at SIP, STPs, investing through all these systematic routes. And as I've said, that 3 days back, Sensex fell by 900 points and again it recovered by 600 points. So volatility is part of markets. In fact, if I have to share a data, if you look at 6,000 days of Indian equity markets, 26 years and 6,000 odd days, 50% of times market has given negative returns. But yet, for that 26 years, Indian equity markets gave a 12% return. So you have to stay long term and get in touch with your certified financial advisor to help you chalk out your plans and goals.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.